So imagine buying a new phone online, right? And in the exact millisecond it takes your payment to process, an algorithm has, well, already built, priced, and issued a custom screen protection policy just for you. No agents, no paperwork.
Yeah, it's pretty wild.
It really is. And today we are jumping right into a deep dive on a newly released private IQ report about a Singapore-headquartered company called Igloo. They've actually executed that exact sequence over 1.6 billion times across Southeast Asia.
Over 1 billion times, yeah. I mean, the scale is just massive because instead of functioning like a traditional insurance firm where, they expect you to seek out one giant expensive policy.
Right, which nobody really wants to do.
Exactly. Igloo operates entirely inside the digital checkout flows of apps you already use. Think of platforms like Shopee, Tokopedia, or Gcash. They just embed the coverage right into the platform.
I do have to push back a bit on this, though. I mean, doesn't buying insurance at an e-commerce checkout just feel like an annoying pop-up to most consumers?
Oh, sure. It definitely can.
Like, it usually just feels like a transparent cash grab,
Yeah, I totally get that. But their literal mechanism actually avoids that friction through what the industry calls sachet marketing.
Sachet marketing.
Right. So they chop those really broad, expensive annual policies down into bite-sized, hyper-specific coverage. So you aren't buying a general property policy. You're buying transit cover for just a few cents exactly when you book a ride.
Oh, I see. Or like gadget protection right when the phone is literally sitting in your cart.
Exactly right. And by piggybacking on the massive user bases of these telco and e-commerce platforms, Igloo completely bypasses the huge customer acquisition costs that traditional insurers spend just to get your attention.
Okay, so I see how they get the sheer volume.
Yeah.
But the math on the back end sounds honestly terrifying to me.
It really does, yeah.
Because if you are selling billions of tiny policies that only cost a few cents, the administrative cost of a human reviewing even one single claim would just instantly wipe out the profit margin for, like, 1,000 policies.
Oh, absolutely. The entire model dies if a human has to process a $5 claim. And that is exactly why Igloo built a proprietary core system called Turbo.
Turbo.
Yeah, Turbo. It relies heavily on AI for what's known as straight-through processing, which really just means the entire claim from filing all the way to payout happens automatically without a single human ever looking at it.
Wait, really? No human at all?
Not a single one. The AI verifies the data, approves it, and it basically slashes their manual workload by 70%.
Which makes perfect sense for, say, a cracked phone screen. But the private IQ report mentions they actually use this for complex products, too, like parametric weather index insurance for rural farmers in Vietnam.
Right, the parametric stuff.
Yeah, and surely a human has to go out and verify crop damage, right?
Actually, no, and this is where the underlying mechanics are just brilliant. Parametric means the payout is strictly tied to a specific measurable parameter, like rainfall, for example.
Okay, I'm following.
So, Igloo uses blockchain technology to connect directly to live climate data. If a local weather station records a drought that hits the exact trigger point written into the blockchain's smart contract, well, the system automatically wires the money to the farmer's account.
Wow. So no adjusters driving out to a field, no messy forms to fill out. The date itself literally triggers the cash.
Exactly. It completely flips the traditional insurance model on its head.
And solving that massive administrative bottleneck actually created an accidental goldmine for them, didn't it?
It really did.
Because the private IQ report points out that their internal TurboTech is so incredibly fast and efficient, the software itself is becoming their most valuable asset.
Right. And that led them to launch Igloo Tech Solutions. They realized that the traditional legacy insurance companies, the exact ones they originally disrupted, are basically desperate for that exact plumbing.
Oh, that makes total sense.
Yeah, so Igloo just licenses out their modular software architecture directly to these older players.
Which is a genius Trojan horse strategy, if you think about it. I mean, they spent years perfecting the absolute hardest part of insurance, which is the admin-heavy claims processing.
Yeah.
And now they're just charging their competitors a recurring fee to use it.
Exactly. It completely shifts them into a B2B software model.
Right.
Because the infrastructure is already built, it costs Igloo practically nothing to process an extra million transactions for another company. That creates incredibly high margins. And the report notes this dual-engine approach, selling micro-policies and renting out software, puts them on a direct path to profitability by 2026.
So for you listening today, what we are really watching is a company that started by selling tiny, hyper-specific insurance policies at checkout. but they are quietly evolving into the foundational, automated infrastructure for Southeast Asia's entire financial sector.
Which brings up a really fascinating reality for you to consider.
Yeah, what's that?
Well, as embedded, AI-driven infrastructure becomes the absolute standard behind the scenes, will we eventually buy all our lifestyle and financial protection without ever once realizing we interacted with an insurance company?